morning, everybody. It's August 16th, 2022. My name's pianomattyb. That is Scaramucci's. This is your morning TA. A brief glimpse into the crypto markets where the sun's shining, where the wind's blowing. All the humble opinion of this piano. Zamboni, bringing the data. The FOMO index has slipped down to 44 from yesterday's 45. Bitcoin dominance is 40.1%. 24-hour volume is 67 billion, and sing it with me now. Heartbreakingly low, and the overall market cap is 1.14 trillion. If I'll take 100 million. Overchord week, that's right. D major over A. It's a positive sounding so-and-so that gives you the feeling of anticipation that something's about to happen. Well, what's about to happen, pianomattyb? Well, mathematically, it just resolves to D, and then I suppose we can all go home. But romantically speaking, resolution is up to you, my friends. Do you put in the work and make it happen, or do you let the math resolve itself while you sit in the back seat, lamenting on what coulda and shoulda been? Get out of that back seat, my friends, and drive this chord into resolution submission. Taking her easy is an understatement, as price action essentially remained the same all day. I had to refresh my charts multiple times, thinking they were frozen before accepting that the markets themselves were just basically not moving. We did wick in some lower lows, bottoming in at 23.7 a couple times before grabbing the hand of the 50 moving average at time of production, 24K. Now we could make a crude little rising wedge pattern here where a breakdown level would be that 23.7 level. I'm keeping my papers on a wick fulfillment and hoping for a bounce. Historically, a rising wedge is a bearish pattern, but we do have contradicting bullish divergence emerging on the MACD. As price actions made higher lows while the MACD is carved out equal lows. So with little to no movement and contradicting technicals, I'm just watching my upside target, that 20 moving average at 24.5, and of course the potential breakdown level of 23.7. Now over on the ding dong, aka the daily chart, we are feeling the bearish pull of the 20 moving average, but the bulls seem to fluff us back up, and if we were to bounce off the 20, we'd officially break down and out of a rising wedge pattern back on the 4-hour chart. And one could, if one so chose, to turn our ascending channel into rising wedge of its own, which would put our breakdown level 23.5. Now if we were to break down and out of that, I'd be eyeing that 23.1 level we've been droning on and on about the past couple weeks. Ad nauseum. And failing a bounce from that, we could see 22.6 as potential support. Bullishly speaking, my breakup and out target is at our resistance level, 25.5, and when one looks at the wicks of bear pressure pushback, seems like a little bit of a tough nut to crack. Bearishly speaking, there is some slight bearish divergence on the old RSI as price action has made higher highs while the RSI has remained flat. Quick look at the Wookie, aka the weekly chart. Sees we're carving out a little bit of a shooting star candle, which is a bearish kind of slap in your face from the bearish type of candle. But it's too early in the week to know or care what she's looking like. I'll paint it green. Price target for the week is above 24.3. But it's the humble opinion of this piano that until we close the candle green without a rejection wick, which is about all we get the past couple months, I won't fully subscribe to a bullish narrative. I can disregard the technicals and hope we're in bullish good shape. But as a market sociopath who cares not for bulls nor bears, I wait for technical confirmation to corroborate a thesis, and a healthy green close without a rejection wick is that confirmation this market sociopath is waiting for. And remember, we're playing the same game as our psychopathic elected lead. That's right, it's the long game. So zoom out and have a fantastic day. Whoa! And sing it with me now. Or on the banks of boom to spang, Bitcoin, crypto, morning tea. Hey, whoa! Ching. Make sure you like and subscribe and share this video.